Are you a buyer out there struggling with the affordability here in Washoe County in the Reno Sparks area? If so, you're going to want to watch this video. So today we're talking about 3 different alternative out-of-the-box ideas on how to find lower interest rates that are out there and take advantage of them. Once again, my name is Ken Angst, team leader of the Angst Real Estate team. Welcome back to the podcast. Goal of our channel is very simple. We help you and people like yourself buy, sell, invest, give tips, and talk about the community on this channel. So if you like our videos, please subscribe, share, and give us a thumbs up. So once again, we're joined with our ace, Elena.
Hey,
hello. Elena Boland. We'll do a fist bump too.
Okay, there we go.
And we're going to talk about how to find some alternative lower interest rates, because it's a big struggle right now, right?
Mm-hmm. Affordability factor.
We just did the numbers. We're approaching 600 median home price.
Mm-hmm.
Half or above, half or below, and then we're talking about 7% interest rates. So we thought it would be worthwhile to talk about a podcast where we give you some other options to find some lower interest rates and get into that mortgage. Because if you wait till rates go down, prices are going to go up, right? So right now is a great time to get in and find these deals and get in the house before rates go down. All right, so we're going to talk about assumable mortgages. Elena, what is an assumable mortgage? How does it work?
When a seller, current homeowner, has a government loan, VA, USDA, FHA, they can have you as the buyer come in and assume the loan that they currently have on the home, as long as you work with the servicer of their current loan.
Okay.
And it can save you a lot of money every month if they have a nice low interest rate. So you have to seek those out, have your agent look for those, make sure as listing agents you are advertising that in the description.
Yeah, I mean, if you have a house with a person, when we list a house, we always ask, do you have an assumable mortgage? And people are like, I don't even know what that means.
Yes.
So it's a good question to ask, and then make sure that if you're a seller, it's a huge thing.
Yes.
What are some of the challenges we have? You got to work with, so you don't get to use your lender. Mm-hmm. So if they're working with you, unfortunately, they have to go to whoever services the mortgage. Mm-hmm. What's that time frame work, and what are the quirks with that? Well,
the departments that are staffed to help with assumable mortgages by servicers are small. Of course, it's not their top priority. They're not earning as much income on those lower rate mortgages. So the time frame can be 2 months with some servicers and 6, and there's really not any guideline or repercussion for them taking the amount of time that they need to get all the paperwork done. And you essentially have to reapply with them to show that you can afford that payment and make sure that you can complete the whole process of paperwork with them as well.
Okay, and then what's it called, the gap?
The gap is, that's a big hurdle that a lot of families run into. Every seller that has an assumable mortgage has some equity there, or they wouldn't be selling. So that means whatever loan that they're offering you as a buyer to be able to assume, for example, $300,000 could be what they owe. And let's say they're selling for $600,000.
Which is very typical. Because someone may have bought in 2008, 12.
Yes. So there's $300,000 you've got to come up with. Now, if you've already got a down payment ready, with your standard pre-approval, that's going to help some, but typically people don't have $300,000 as a down payment. If you do, wonderful, no steps needed. If you don't have that gap, then you've got to look at alternatives like a home equity line of credit, a second mortgage essentially. There's a couple of great second mortgage products that you can explore and look at, but that's what you've got to do and get started to fill that gap. So you're essentially doing your assumable mortgage application and your second mortgage application at the same time and trying to get those to line up. And make sure that your seller that you're asking to assume their mortgage can wait out all those processes with you.
Yeah, because it can be 3 to 6 months.
Yes.
Have you done any of these?
I don't service loans, but I do have
some
clients that come and say, hey, I found this assumable mortgage. I'm gonna go for it. And we have helped with a couple of home equity line of credit products to help people fill that gap.
Okay, so an option. I've only done one. It just kind of worked out well. It was like an $80,000 gap, which was perfect because my guy was bringing $80,000 down, so it worked like a dream.
Yes.
He essentially got a 4% mortgage when rates are around 7. So that's
Absolutely.
huge savings.
Mm-hmm.
And then you assume their balance, right? Whatever their mortgage balance is. And now when you assume it, is it at 23 years? Or when you assume it, how does it work? Or does it start over at 30?
It starts over at 30.
Okay.
But you have to go over that with the servicer because it's really up to them. Again, there's not a lot of federal guidelines into play because this wasn't something that people were utilizing or taking advantage of for at least the last 10, 15 years. So again, each servicer, you've got to really, really get in there and be the bulldog.
Yep. And make sure you gotta read all the fine print.
Yes.
Make sure you know what you're getting into. So that's number 1. So number 2, so you're a little scared about high interest rates and affordability, so we're looking at all the different alternatives for lower interest rates. So your second opportunity to find lower interest rates is, and it's a big thing right now, a lot of people are offering it, is asking the seller for an interest rate buy down as part of closing costs. So what is a buy down? What is a 2 to buy? So there's several ways to do it. There's a 2 to 1, 3 to 1 buy down. We'll go over those. And then there's a permanent buy down. So let's talk about what a buy down is, what the cost is, and how it works.
A buy down is essentially a fee in exchange for a lower interest rate. So, how far you go into fees is something you have to discuss with your lender that you're pre-approved with because of the different variety of products. Like you mentioned, there's the permanent buy down, which I'm the biggest advocate for, because again, the word permanent obviously has that safety net, which is great. There's maximums that you can hit on your buy downs. For example, the typical maximum is about a 3% fee that you as a buyer can help cover, or the seller can. Most popular, of course, is having the seller cover that. And then it can get your rate into, low 5s, high 4s, depending on what loan product you're using. The second option is that temporary buy down, or there's 3-2-1, there's 2-1.
What does that mean?
All those represent the first couple of years of your mortgage.
Right.
And the fees. So the most common one is a 3% fee to get you a lower rate for the first 2 years of your mortgage. So you ask that seller, please pay for me this 3% fee, 3% of your loan amount. And then let's say the rate is 7. So year 1, your rate is going to be 5. And then year 2, your rate is going to be 6. Year 3, it hits that market rate of 7.
And then it continues all the way until it does.
Yes, and then it stays permanently at that current market rate. And you can refinance out of any of those products.
Anytime.
You just have to make sure with your lender that you fund your loan through that, of course, there's no prepayment penalty, but it's not very common right now. Just, again, read that fine print.
Okay, so interest rate buy downs. So look into that. You have to have a buyer's agent that's knowledgeable, that puts that in your contract. It has to be negotiated in. And sometimes that's more important than price, right?
Yes, absolutely. If you're looking at what's going to save me as a buyer the most in my monthly payment, I always recommend pay full ask and then ask for a credit. You can't get both.
And then it's kind of, you're paying for it essentially over 30 years.
Correct, yeah.
So, so that's the second one. Third one. So we're outside the box here talking about 3 different ways to find lower interest rates in 7% interest rate environment. So
Yes.
Third one is, and Elena may not like this one, but look at new home builds. So home builders, if you go look at their stocks, are down quite a bit. And what they're doing is they're basically, when you go in a new home build, you sign up, get a contract, and then they have a lender. Now you can always take your own lender. In most cases, have your own lender come in, but typically they give you some kind of incentive to use their lender, like a credit, a closing credit. And then what they're doing to sell houses right now is buy down your rate permanently. So essentially they're a seller, and then they're just basically financing it and taking a loss on it. And you can kind of see by a lot of the home builders taking, I think D.R. Horton just took quite a bit of loss. So that's how they're getting some of their houses sold, because the market's sold. So how does that work? You go into a new home build, they give you some kind of incentive. So run us through the process of what you know about when you buy a new home build and then use their lender.
So the home builder is the seller, right? And just the way you would buy a home from a private resident. So the seller can always say, if you use X lender, I can give you a credit. So they control that portion of the transaction because they can manipulate the price and they can manipulate the interest rate. So another quick example would be, again, paying their full ask for that new construction build, and they've built in there some cushion to be able to credit you the money that you need to buy down your interest rate. And you can get, again, 2% lower than the market rate, and of course help you save tons of money on your monthly mortgage.
Yes. So basically, they're financing, and they have a cushion, so their profits aren't going to be as much.
Right.
They're getting flatter and flatter. They're trying to get rid of inventory. They don't want houses sitting around because it doesn't look good in the numbers.
Right.
But most importantly, this comes to show you is you are very foolish as a buyer if you ever walk into a new home build, your first visit, without taking your realtor.
Representation is very
Because they say that they're going to take care of you, and the agent in there, yes, we're going to take care of you, Mr. Buyer, Mrs. Buyer. But ultimately, you need an experienced agent to ask for these things.
Right.
Because you can negotiate with new home builders, particularly now.
Yes.
Now that it's slowed down, they have little houses in inventory, they're willing to negotiate. So don't think for a second that you have to go in there. It's kind of like buying a new car. You can always negotiate.
Yes.
Always negotiate and see what happens. The worst they can say is pound sand, but
Right.
have someone on your side looking out for your best interest. What are the downfalls of buying a new home build? So there's some pitfalls about, you may come to your mind on
Property taxes.
Yes, so let's talk about property taxes. She hit it right in the head.
So buying a home in Nevada, one of the biggest advantages is that our property taxes operate on depreciation. So if you buy a brand new home, there's no depreciation yet applied. You're paying the same property taxes as you would if you bought a home in California. And of course, being here, that's something you're not typically looking for especially if you're relocating to the area. You want to take advantage of that lower tax bill that you see as a Nevada resident.
Yes.
Now there are exceptions, of course. For example, if you're a veteran
Yes.
and you have a disability
Now, this is
rating,
good.
you
This
can
is really
get a discount on your property taxes.
If you're over a certain age,
Correct.
if you have some kind of disability, you can call the Washington County assessor. I'm doing a podcast. I'm actually interviewing the assessor next week, and that's why you have to subscribe this year. We're going to talk about all the different ways that you can get a discount on your property taxes.
Yes.
So and it kind of depends on your tax district and what tax district you're buying in. It can be about, on average, if you just look at it holistically in Washington County, it's about 1.25% of your sale price. So if you're buying a $600,000 house,
It's a big bill.
$6,500 to $7,000 a year.
Right.
Now, if you buy an older house in the old Southwest,
Half that.
half, maybe a tenth. But keep in mind, and this is what the thought behind all this is, when you buy a new house, you don't have to make repairs.
Right.
And what they're doing every year by depreciating is that you're supposed to save some money in your account. So when you need a new roof, when you need new flooring, when you need new siding, you're supposed to have that in reserve. So that's why they do it. That's the reason behind it. But it can be very expensive to buy a new home when it comes to, you'll save money on interest rates, but it'll be a wash on your savings. So
Right.
be careful with property taxes and ask that, because if on the MLS, they don't really tell you, they tell you what the taxes are on the land,
Yes, I was just going to bring that up.
and that's not what you're going to be paying. So you need to ask that and find that out up front, because it could be $300 to $400 a month.
And Zillow too. Zillow shows the dirt taxes as if there's no home yet built. So it's something you really have to be careful about and double check with your lender.
And the last problem, not necessarily a problem, but something you need to know about as you buy a new home build is you're probably not going to get window treatments. You're probably not going to get a washer dryer. Maybe you can now. You're definitely not going to have a backyard.
It's very expensive.
So those are all things that you're going to have to pay for after money, which a lot of people don't have the money. So if you're already bringing in a huge down payment to buy a brand new house, it kind of stinks in the next summer when you go outside and it's completely dirt. So,
Or mud.
and
And
I
you
mean,
have
some
animals.
people can do that, and particularly with animals. Some
Yes.
people can go do their own backyard, but typically, you're probably talking at least 10 to 25,000 on a very simple design.
I've had several HELOC applications from new home buyers that needed $50,000 to $100,000 to landscape their property. So definitely get that quoted before you even sign a contract if that's something that you're interested
Because
in.
I don't want you guys coming back a year from now and say, well, Ken told me to go buy from a new home builder, and now I got to put a new backyard in, I got to pay for window treatments, and my property taxes offset everything I'm trying to do.
Or a lot of buyers are given the information that whatever you put into your backyard dollar for dollar is going to increase the value of your home, and that is not necessarily true. It's a preference. Yes, there's some value in it, but again, make sure you're consulting with your agent, looking at comparable sales and all those numbers.
Yeah, because most houses, I'm just telling you, that are resale have a backyard.
Yes.
So they don't really. I just ran into this one down in the Golden Hills. Beautiful backyard, $200,000 in upgrades, and the appraiser gave us like 40% of that. So essentially, they gave us a credit for $80,000 when they spent like $200,000. So don't think for a second, dollar for dollar, if you go crazy, that's more for personal enjoyment than it is for resale. So, all right, awesome.
Okay.
That's why we have her in right there. That was all awesome, good information. If they want information about resale mortgages, what's the number?
Call me here locally, 825-1600.
And you do HELOCs?
Yes.
Okay, so if you need that gap, you can still use Elena. Very competitive rates and one of the best in the business, so give her a call. And if you have any questions about buying or selling, particularly in South Reno, that's where we're experts. We'd love to help you and earn your business. You guys have a great rest of your November, and make sure you're liking our videos and tune in next time. Thanks.